Good evening, everybody. Before we start in a couple of minutes, let me just quickly annotate the key trades for today. One of them is here. So this will be clipped for later use. I get the orange buying here. Right, you saw the quite beautiful pink forming that nested inverse head and shoulder pattern here, activating for a little while this green. I talked about this magenta tapering here as well, so this is also a possible trade. Now this one is a big one, right? We started chopping here. I will talk a little bit about this, and we had the break from the pink. Now this one was, I'll show you this particular trade here. Even if you caught it late, you would see one of my trades here. Even if I caught it late, it was still absolutely beautiful. And then we wedged right back in. Right, so we wedged right back in at the 5-day moving average here. Now, usually I wouldn't have traded this, but given the volatility, this is also a viable trade here. So I will be clipping this, explaining them later. So right there. Okay, can you hear me loud and clear? If you can, let's get it started. Let's see. Let's run through first what we see today. The algorithms have shown themselves and how we're able to find profits in the charts from here. Now, I think one of the bigger trades for today, well, apart from this news candle here, which I will explain that shortly, most importantly will be this front portion at the start of the day here. So let's take a look at the start of the day, what to be preparing for. I gave a very simple chart here, isn't it? Talking about your strike price and how it will affect your trades here. So this is quite an important diagram. I want you to be taking a look, and it will teach you quite importantly to be choosing the right strikes and focusing on the short spurts of your trades. Now, TG through the orange, for example, especially if you chose a wrong strike price, you are just putting yourself out there in the market with your open order, just decaying over time. So you have to be very careful with choosing your strikes. And that's the thing about day trading. A lot of day traders out there, you get fooled into thinking that this is just a gambling machine. You just have to choose the direction up or down, right? And you just choose the cheapest option. And that's truly one way of trading without proper training and skill, and that will get you into trouble eventually. So this diagram here, I want you to study that and understand the choice of your strikes. And obviously, my point was to teach you a couple of things, as I talked about here as well. Right, you don't have to commit to a trade too early. If you study my trades later, you will see that I took a trade much later too, and it still went 10x. So this particular candle here, right? What happened is, if you are a gambler, you're trying to catch this candle, which most of the time it's just luck. This candle is luck if you catch it, right? Unless you have some insider trading, or obviously if you get into position, that's great too, right? But it's very, very difficult to catch this candle without sustaining a high level of risk. I entered only here at this candle, but yet given this precision algorithm here, I was still able to catch a 10x trade right here, right? So take a look at the my 10x trade right here from 390 to 38, and all because I caught it late, right? See, 428, 228, which is much later here. 228, a lot later. I caught it at this candle, a little later at this candle. All because you understood how to be looking out for the precision algorithms, and you nurtured it, you protected it quickly. I will share a little bit about this technique a little later in this live stream, right? But that's what I want you to try to understand. That's quite important. So let's take a look at the rest of the trades for today. The first one obviously was the upside, that first trade that I talked about as well. There are very key important information here I want you to see. Right, the first one was this, right? So understanding the reclamation of, let's take a look at the start. Understanding the reclamation of the yellow is quite important, right? I talked about this yellow, 680 level right here. Now, this was as early as 942, yeah? So understanding this from 942, you understand that there is a very key level here. 942 was about here, right? It's still early days. You notice it's inconsequential after which. So this is why I also say don't rush your trades, right? Notice how inconsequential this is compared to the rest of the day. So anyway, understanding this, seeing the green breaking out, so you know that there's buying intent, right? Unfortunately, there isn't more THU algorithm that starts to build liquidity, or at least it's not clear to see. So you see a single candle on the breakout bouncing off that yellow, because that yellow is a very important level, right? You understand that, and you see at that point we also have the pink algorithm that showed itself. So even if you miss this trade, what's the problem with this, right? You could have caught a trade later on anyway, because later on, as I was telling you, you have to wait for the pink to rebuild liquidity. And you see that, right? I will talk about this in a bit. And you see the pink building liquidity right there. Nothing new, right? This was at 1010, right? Understanding the liquidity, 1010 is here, right? So 1010 right here, you saw the pink already starting to build liquidity together with the teal. And just see how beautiful the market grabbed the liquidity. We had confirmation with that green buying, right? So this green buyer wants to be involved, and thereafter it started forming a nested right shoulder here. So you see an inverse head and shoulder pattern with a nested right, and with that two green algorithms confirming on that buying. So this was an absolutely beautiful trade. This was easily 100% trade right here. All because you waited. You just have to catch this for the 100% trade. Comparably to you, if you bought something that's slightly out of the money here, as I was demonstrating, right? You bought it here, you still would have lost money here, because to get it in, the money was here. So you notice that's how they do it. And I will teach you in due time to use the algorithms in your choice of strikes, right? So this is understanding. Now, at this point in time, I identified the magenta. And I told you, just go relax. There is this magenta here. Yeah, magenta exists. What time was this? 9:54. 9:54, that's how early we identified the magenta. About here, this was 9:54 a.m. Right, we already identified magenta right there. And I told you, take it easy, right? If this wants to dump, you're not going to miss it because of magenta and yellow. So even if you set your alerts here and caught this small move, this would still be 100% move. That's good. Why do you want... we could have caught this too. I show you this later. But if you just set your alerts here, go enjoy your day, you have confirmation that the seller, in this case that green seller, is participating today, and you want to be part of his project of selling today, you could have still caught the trade because you understood the liquidity that's being built at magenta. And I want you to see how penny perfect magenta was, because this will prevent you from shorting later, because you understood magenta. You have magenta to guide you, to prevent you from shorting. How precious is this? So there are people who shorted this. Yes. Without structure, without breaking magenta, but you and I were different. We see there's magenta. There was absolutely no reason to go heavy shorting this until it breaks. Understand that. And all because you identified the magenta. Just take a look. Penny perfect. And I shifted this slightly like this. It was penny perfect like that. Now, prior to that, you understand that there was some tapering. I told you to be careful once we reached the MAs. Right, so this was what I told you at 1025. So 1025 was about here. Right, we're not even close to the top yet. But 1025, this was 1025 a.m. I told you have to be very careful because of the moving averages, and we may be tapering, and you see it for yourself that we started tapering here. And once we started tapering, there could be an easy trade to take here because, right, you see how sometimes you forget even the bullish control. Now, notice this is a bullish control, pink. Yeah, you assume that it will always be a bullish algorithm. It is. It's controlling the liquidity for something bullish. But don't forget, it's still, after all, a selling algorithm, and this is still a resistance. And this is why I always tell you newer traders, wait for breakout and retrace. Wait for the buying algorithm to show. Otherwise, it's still naturally a selling algorithm right there. Right, so understand this, and you see how beautiful that head and shoulder pattern is, especially once the teal, and most importantly, it was this green. Now, without this green algorithm, I wouldn't have taken this trade here. Right, so the presence of this green selling algorithm, right, gave me some confidence to take a trade here like that. And obviously, after which there was another trade here off that break, of that magenta, right, the earlier preparation that we did. And I talked about that breakout and retrace. You saw that happening. You saw that happening right here. Absolutely beautiful. I will be touching more on this, but just take a look how beautiful that is. So wait for breakout and retrace. There's no need to be catching. If you have the teal so beautifully charted for you, penny perfect like that, and you had very key levels with that magenta and that yellow here, right, you will wait for the breakout and retrace instead of, for example, taking puts here. Why are you taking puts here? When you see the selling is in teal. You know the selling is in teal, you're still taking puts here near to the support, right? But if you want to know that there's a green that's selling, I would wait for this instead of forcing puts here near to the support of teal. Instead, you should allow this to retrace back to a very key level that you know could be a resistance. And you see the three levels of resistance here, isn't it? You have the teal, you have the yellow, and you have the magenta. So this was a very key place to take puts here, the retrace. And you have that beautiful trade here. This was easily 100% trade too, given today's move, right? Very big moves today. This move was already about 2 points. Absolutely beautiful. Very important levels here. So understanding the techniques to be taking the trades, and I talk about that a lot. Right, I mentioned about this technique here as well. Let's see. Yeah, this particular technique here. Right, I talked about this technique here at 11:51, even before it happened. Now sometimes I have the 11:51 was about here. Right, this was 11:51. Now sometimes I have the ability to do it, the luxury of time to do it when the market is slightly slow. But otherwise, all these techniques you can be learning early, and you apply it during trading hours. Sometimes you don't have the luxury, right? This move may happen even before I could clip a screenshot, I could annotate, or I could type and explain. And don't forget, you need time to read, and you need time to digest this. You need time to open up the screenshot. You need time to find reference at what time is it I'm talking about. So sometimes we don't have the luxury of time in a very high intensity day trading, especially on a 1 minute chart. So yes, you need to take your time to understand this, because if this is the first time you see a screenshot like that, you probably need 10-15 minutes to try to make sense of it. But if you're trading with me every single day, you see this, you know immediately in 30 seconds, you know exactly what I'm talking about. So it's going to take time, especially in a very high intensity, high octane trading environment in a 1 minute chart in day trading. So you understand that. So take your time. Everything is archived here. You can study it later. Absolutely not a problem. Now the blockbuster came here. Now this became important, right? Because if you're waiting to short this, you could take a lotto. Yes, for sure. Take a lotto, as I always say, take a dollar spread. Take something that allows you to have it completely worthless, but it doesn't affect your stop loss. So, for example, I always have about $1 stop loss for my SPX options. So in this case, if I wanted to short this, I would find something that's worth $1 to short this. Right? And it's not improbable, especially so late in the day. And there's some certain targets, if I'm not wrong. Today's IV was slightly high. But this could still be $1 trade if I could take a debit spread if I wanted to. And just allow it to die off in this. I'm not worried, no matter how much liquidity it's starting to build. When you understand that, you will not take too much unnecessary risks taking a bad trade. Now, this could have happened. This couldn't have happened. So you have to understand that. It doesn't mean, because this pattern forms, that's why this forms. Now, that is the problem with day trading for some of you. You mistake correlation to causation. And so because of that, you are always trying to predict the next move. So when you're day trading, be honest with yourself. How many of you are always trying to anticipate the next big candle instead of reacting to the confirmations that the market gave you? You see the big difference here. Now, if I took calls here, this is a gamble. It's absolutely a gamble unless obviously I've been teaching you techniques too. You could have just taken a trade here, protect, reload it here. You'll still be green. So your entire trade process will still be green, right? You could have done that too, yeah. But the thing is, how tiring will it be? And some of you want to be challenged that way, right? But how tiring will it be to maintain positions within this liquidity building phase here in this magenta? So the first thing first is, firstly, we're able to identify the penny perfect magenta, and this should give you a lot of ways to plan how to be taking a trade. That's the first most important thing, right? This is the most important thing here. If you don't have this magenta, you have no idea what's going on here, and you just get caught in the chop. But for you and me, we have magenta, we understand the structure, we even have the pink. The pink was a great bonus because you see it was also trending down the pink. When we have this, we know this is an area not to overtrade. Now, if you want to be overtrading this, now if you are an advanced trader, what you can do, and I used to do that before my surgery, had so much more capacity to do that. What I would have done was to protect a position. So get in a position to protect my calls, and then get in a position to protect my puts. And because of that, in the 1 minute chart environment on the 0 day to expiry, I will be able to have open calls and open puts that are already protected within this chop. And so therefore, I have a strangle that's being paid for. That is the best case scenario, right? But not something that everyone can do. I can't do it now, post-surgery. I could have done it, and some of you has seen me do it before my surgery. And that's it. This is how you know how to do it, because you know that this is a liquidity building phase. Truly, you do not know if it's going up or down, but you can get into position, and I have videos about that, about getting into position. So when you understand this, you can plan for that. But you know what's the worst case scenario? The worst case scenario is that there is no action. And it could happen too. It could jolly well happen. So when that happens, what you're going to do? Now, on hindsight, when you see these large candles, somehow you feel like you're missing out. But let me tell you, probably 9 out of 10 days, there will not be this sort of action. And you just get yourself slaughtered. Just example will be the several times that the Supreme Court was supposed to be making deals, making a verdict. Didn't happen. So you notice it's not always you have this. And on hindsight, it looks great. Yes, I know. But you just have to, even if you miss this, right? So be it. So be it. Absolutely fine. But you can learn the techniques to try to catch this. And I've shown you multiple times. Now, my trade was simple. I saw the large candle, right? You saw the large volume there. This was something. Now, so this is why identifying the buying, who's buying, the participant, the person who's buying strongest in the market, in this case is that green precision algorithm. We identified this early, right? If I even used it to make some money at the top, near to this. Remember the nested inverse head and shoulder pattern, right? So I already know this buyer existed, and so all I had to do was to chart it out once we had the green candle, see if it sustains. And yeah, it did. This particular buyer still continued to buy all the way to the 20-day moving average. Now, I still caught a very good part of that 4-5 point trade here. All because you understood the green precision algorithm that you prepared beforehand, and you see it happen because you set alerts on the break. Now, my alerts were here. When I showed you this, right? I showed you the liquidity wedge. I showed you the wedge, and I showed you the alerts that you have to place. And once it triggered here, you know that there is buying. This is strong buying, right? This is even stronger than the precision algorithm like that. So you know that this particular buyer is getting serious. You want to see if there's continuation there. And fortunately there was, so it was an easy trade. This could have very easily did this as well to grab the bearish liquidity, right? So when that happens, you are also informed. And I would have been ready to, if this continued to head down and you see the seller starting to participate. So it doesn't mean that there's a large green candle it's going to head up. In this case, obviously, it's bolstered by a news that's suppressing the market. So the news did help this, absolutely. But you knew the context of that news, and therefore you knew how to react because you were already preparing for that trade here. So a million ways to trade this, a million ways, up to your edge, up to the time that you can afford. And I wasn't even around for this magenta, right? I left the magenta there. And once it broke out, my alerts were triggered. I just caught in a trade. Just take a look at my trade again. I caught that within 3 minutes. Within 3 minutes, the trade was already done, right? I just left a runner all the way up to, this was just a vanity runner, right? All the way up to the MAs, right? Obviously, this runner paid quite well. But you understood that my trade was already fully protected within 40 seconds because there was a news candle that you prepared for. So likewise, don't be some of you. And if you're having this sort of bad habits, and that's the sort of metrics I'm trying to tell you to keep track of. Because some of you, if you had a call open here and you managed to benefit from this, this is not ideal. This is not ideal. This will get you into trouble eventually, even though you got lucky today. Because it's the same idea as what I'm trying to tell you. From my example here, when I talked about how this call that you got here became almost, you lost money even though we went up 5 points. So if you took a 69.10 call here, your 69.10 call here, you lost money even though you were right for 5 points. You see the problem with that? Don't hold. But if you were taking 69.10 here and closing it here, this would be easily 150% trade here. You see the idea behind this instead of holding here to here. So sometimes it's about understanding how to be playing the game, understanding the rules here. So it's quite a straightforward day. Now, obviously, I had a very good day. But as I tell you in the live stream, your day trading account has to be an accelerator. So if you're trading with small money, that's what you need to do. Grow your small money and accelerate it. Days like that, it helps you to accelerate your money. So you have to learn to accelerate it. Yeah. Very dangerous too. If you're trading 0 day to expiry and you have no idea what you're doing. Right. So that's the sort of precision that you require when you're trading something so volatile. But everything has its pros and cons. And the reason you're trading 0 day to expiry is because you're trying to take advantage of the leverage that is offered to you. And that's why your strategy has to be one that accelerates the money. So understand the tools that's available to you and how to be using that tool, right? You have to be using that tool to your benefit. Now, let's take a look at the daily chart. No surprise, isn't it? Right, so remember I told you to hedge here, right? It was a good decision anyway, because you have already cashed out the hedge. I told you to roll down the hedge. You remember that, because you don't want too much value in the hedge once it got to your target. So you see you cashed out the hedge here while waiting to see if this continues to head down with the 5 day. Can't be too sure yet. So don't be complacent. You have no idea yet. You let the market show itself to you, because this can still do this. Right, you let the market show itself to you, and that's why you still have a cheap hedge now that's open here, because you have already took some positions. And one of my rules here, which I will teach course members, is to buy in at the bottom Bollinger always, even if it's a small position. You do it because it's part of a buying in strategy, and you benefit from things like that. Right, I talked about Nvidia, so we got Nvidia for cheap because of that. Right, so it's part of a strategy, but you don't go full in, you don't go all in at every instance. So when you're trading larger time frames, most importantly, you must remember, well, even in day trading, you don't go all in any position, not at all, right? You always scale in. That's the secret to trading. You always scale in. All right, so we have opportunities later. We'll figure it out. Let's take a look at the 30-minute chart, and let's prepare. Now, importantly, right now, you see how beautiful that magenta, right, rejected that range together with the 20-day moving average. So this was pretty clear. The key is that there is a gap here that can be very easily taken. So we have to be very mindful of that. But the main liquidity level is still within this green algorithm here. So if you want to see this breaking out here, now you see the green already buying. There's buying continuation. It will be great. But the best if we see a structure here breaking out. By then, your 20-day will turn into support. So will your 5-day. Together, your 5 and 20-day support, you will see a very clean structure within the green algorithm, and it will continue buying up in the green. That will be the best case scenario to grab this liquidity on the way up, if the market wants to head up here. So quite important you pay close attention to this. Now, if we are continuing buying in the green, this can absolutely happen too. So this is where you have to look out for the 1 minute structure here. But it's easier because there's the moving averages to help you support in your structure on the 1 minute trade. What I want you to be careful of is this magenta. Now, this may look, it may not look consequential now, but this is liquidity anyway, off a very important key level at the 680 yellow. So just pay close attention to that. Set alerts. You don't know if the market wants to head down. Could be some crazy news again tomorrow. But just pay close attention to this, all right? At that 680 of the orange algorithm. This is the liquidity that I was talking about here with the magenta. So just pay more close attention to that, all right? Set alerts. If the market wants to go down, you will not be surprised because you have already identified the liquidity here. Right, but otherwise, the dump always happens with blue algorithm. So if the blue does not build liquidity here, this is not going down yet. And there is a larger trade to go down, and that will be off that yellow. So you see that yellow here. The market wants to build more liquidity heading down. You will not be surprised if it wants to continue to build more liquidity with that magenta. Now the difficulty here, as always, is understanding that there is a wedge, and we are technically in the middle of the wedge here. Right, when you're back at the moving averages, you're literally in the middle of the wedge, so you just have to be more careful. The reason why being in the middle is good is only if you have protected runners already. So if you bought something here, whatever it is, you are already protected here, fine. You look for continuation. But otherwise, for you who have not opened a trade, especially in the middle of the wedge, just be careful. Like what I mentioned, there's no need to guess. When the market wants to make a decision, you have the means to be this precise. You have the means to be this precise. Take a look. Now, if you have a skill that can absolutely nail how precise this is $1 million skill right here. Right? Practice enough, you can make money with this because of that precision of the algorithms right there. This is a skill. You could have caught this anyway, even if you missed a large candle. So a big part of it is psychology as well. When this big candle lands, how is your mind processing this information? Most of you will be like, I missed it. And then you botch the opportunity to be planning on how to be taking a trade, right? Or you have no idea why this happened, right? You don't understand the magenta liquidity. So you started shorting this while we are still in the strongest buying. Remember what I mentioned. If we are in the precision algorithm and you're calling for the reversal, you are feeding into the exit liquidity. You're the reason this is going up if you shorted it here. So you see, these are techniques that you already know. So you have to practice, you have to plan ahead, you have to prepare, and you would have to be able to call trades like that. Million ways to trade, as I mentioned. I prefer now to trade more relaxed, comparably to when I was prior to the surgery. Now, there is a difference, right? I am not living the same anymore, and that's fine. You see, I still can trade well, I still can make money. So you notice there are a million ways to trade. This is not a one-way ticket, right? You're learning something to give you the edge and to bolster your skill so that you can make money for the rest of your life, no matter what condition you're going to face. So yeah, I'm not as good as I was anymore, but I'm making more money now. So you see, the idea is to shape it accordingly, right? There are very old sports players as well. They change their style over time, and they still remain relevant and competitive. Why? Because they have the basics of the skill, the fundamentals, as I always mention. And if you build your skill upon the fundamentals, you don't have to worry, because skill will never go away. Real skill will never go away. You're always building upon it, right? But so many of you are trading, and you know this. Just be honest with yourself. You're trading because of luck. If you made money out of luck today, you don't be happy. You need to study double, because you need to know how to break out of that luck barrier, because you know that you didn't make money out of skill. People have, you see positive results, and you correlate it with a positive thought process, which is not always the case. Like what I mentioned, the causation does not mean it's correlated. So if you made money today, doesn't mean you made good trading decisions. Yes, go review, right? A review here. I will clip that for review later, and obviously run through this live stream again so you have clear understanding. Right, so we're prepared for tomorrow. Let's wrap up the week strong, Thursday and Friday, right? Take it easy now. Always take it easy, right? The market will give you clues. The market will reveal itself to you, and by then you'll be ready, right? It's all about preparing ahead and reacting to what the market revealed to us, because we're able to pin it down, penny perfect. But if you're anticipating, if you're guessing, if you're gambling, you'll be in trouble, especially if you're trading 0 day to expiry. The brilliance of this is that you need to accelerate your money, right? I'll give you an example of accelerating your money. The example of accelerating your money will be this. Right? So accelerate your money. That's what you need to do. Understand that? Okay. So day trading is a platform for you to accelerate. You want to have larger returns for smaller capital. And then you take that and buy in your portfolio, as I always mentioned in your trading video. So please, training video, go watch that. All right, you understand how to approach this. The links are in the description. Please do watch that later. Thank you very much for watching. I'll see you closer to opening the bell. Goodbye. Thank you for tuning in. Thank you.